All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I just made a Pepsi entry, sent out the alerts here. You can see in the live account the fill price down here at $1.60 in on Pepsi. You probably can limit order that and get a better price than I did for 5 contracts here. And whoops, let's see. Here we go. Yeah, it should be. Yeah, 155 to 161 is the bid ask right now. Spreads on this, it's about normal for what I would expect on Pepsi. It's not a penny spread or something like that. But I put $800 here into the trade and going to run with Pepsi here into the weekend. I expect this to close at 118 today. That's kind of what I expect. So I don't think, I think this is something where I'm getting it about fair value for where I expect it to end today. This is not a trade I'm making with expectations that it moves into the close or anything like that. Now I know it could move up, could move down. Heck, that's the market right now. But this is a play that is strictly Pepsi chart related and has nothing to do with the market. In any view I have on the market or on 90% of the stocks out there. This has been a stock that cleared these highs. Very nicely, cleared these highs, came up and hit this kind of 117.5 area, found some resistance, pulled on back a little bit, but notice the volumes very low, so no sign of any topping or anything like that. And today, the gap up and move, just shows, okay, the trend is resuming and, and ready to go. We saw that back here in June. We saw it, a couple times in June, a little stronger in July. But it's classic continuation pattern and allows me to use 117 as that out area to say, okay, you know what? Fine, I can run with it here. Breaks 117, I move on and go. Ultimately, this does look destined for 120, but we'll see how it goes. And one of the reasons I'm willing to make this trade as well is not just the overall bullish continuation pattern here in the daily chart. But if you look here at the hourly, we got we kind of got the breakout into a new high, and I'm buying it on this little bit of pullback that it's had this afternoon and using that as my opportunity. We have a positive MACD. MACD has turned, pushed back above zero here on this move. So overall, some solid hourly stochastics pushing above 80, which is, tends to be a pretty good sign in this market with these trenders of, hey, you know what, it's ready for a little bit more move to the upside. Now I only put $800 in. That's going to kind of be normal for my trades, right? $700-800, somewhere around there. To kind of start, is they're going to be a little more short term. You won't see 2,000 or 1,000, kind of split up that way here to start. And some of that is because of the risk reward factor. Some of that is because of the shorter term of the options. But going to run it that way. So in on Pepsi, TLT. I talked about it this morning, and I've just been watching it today. It just took off. It just took off and chased. Here, and it's one that I just don't like the risk reward on it right here, but ultimately TLT higher, Pepsi likely to go higher as well in that environment here. So hopefully Pepsi will close within about 20 cents of my entry. Doesn't get too caught up there, but either way, I'll run with it, kind of using that 118, that 117 level. And, looking to pull it around, 119.5, 120.5, depending on, how it gets there and, ultimately, it shapes up to be. Overall market, not a lot that I'm too impressed with. This is an option consolidation, option contraction day. That's what this is. We've had some jumps, we've had some dips and rips and everything else, and some news driving into the market. But you can see the market still below the 7-day moving average. Off of its highs, but off of its lows. And this was kind of my fear this morning that we talked about, that, the market just doesn't really do much today, that it just kind of sits here. And what do we see? option prices grind and grind and grind down. We are seeing that in so many names out there. Sure, you can find one or two stocks, you can find a handful of stocks out there that have really made big moves today, and those options haven't been flat or eroding. But for the majority of stocks out there, there's been an erosion in option value that has come in today with this type of action. And, just something that, was high risk this morning. And that risk is being realized here today, and it's one that I'm going to stay out of. I don't want that risk here. We'll see how the options fall into the close, and maybe I'll set into another trade. But just looking at how things are shaped up and how things are formed out there in the market, I think most likely I will go into the close as I am now, look to put some more money into play Monday morning and go from there. I have looked at a few SPY options here. And, to the downside, not necessarily looking at a directional play, but can I get something cheap that if the bottom falls out of this market, I can pay it off, right? And so something like, those prices looked off. Something here, something like a 268, 269 put spread. I try to avoid spreads when it comes to the challenge, but, if it's juicy enough, I will go and take it here. But, if I could get this here ultimately for about 10 cents instead of something like 20 cents, I might be compelled to do it, but probably wouldn't come until Monday here, with something like that. So, in all, I still like the FXI. I still think the FXI goes higher. Ultimately, we did see Trump's comments today. They drove this move right here. They drove this uptick right here, and then that was just kind of faded. And I don't read a whole lot into these fades in the same way I don't read a ton into these jumps today, other than, look, the move that the market made down when trade war was talked about in a negative light was lower than Fed move. The move up on Trump's comments about trade war, that was lower than Fed move, right? And we've seen 3 separate Fed governors, including the Fed chair, come out with the same message in the last 2 days, pretty much last 3 days, basically saying, look, we're going to be data dependent now. We don't have a hard, fast, set plan. We may be rate neutral in 2019, and really kind of getting back to a more dovish stance or a more reactionary stance rather than a, hey, you know what, this is our plan, this is our progression, and we're going to go. Right, which is kind of what got the market a little bit, not kind of, is a big thing that got the market, kind of bent out of shape. And, where I stand on that, in terms of the whys of things. If we look at the VIX today, right, market's flat. It's been up, down a little bit. The VIX is down 5%. Right. That tells you what about option compression today. Right? Options have been compressing across the board, and there's a volatility contraction that is going out, and that's not uncommon to see this time of year, especially going into the Thanksgiving week, to see some volatility compression. I did price out some VIX puts. I priced out some VXX puts. I decided not to pull the trigger yet. But those will be on my radar early Monday morning. With the VIX puts, I'm not convinced that the futures of VIX futures, we're going to see the unwind of some of the contango that's in them, some of the backwardation that's in them. But overall, I do think there's a very interesting scenario, very interesting case to argue VIX under 30. Or VXX under 30 here, even in the potential near term. And it's one of those where I almost want to go out and buy a SPY put spread for just a little bit, like $200 on the challenge, and then buy a VXX put spread for the challenge as well, so that, a big way either way, pays off the challenge very, very nicely, and I'm not having to outlay a ton of risk for that. But I'm not going to put that on before the weekend. That'll be something I look to put on early next week, and if I do put that on, I will show it live, and explain it live here overall. Yesterday, there were two Katie signals, Micron and FCX. Been watching the action on Micron today. Look, given everything that happened today with Micron, this is an impressive move. This is a very, very impressive move. AMD has not had the same holding up. AMD down 5%. We saw NVIDIA earnings, right? And that's what's driving some of this. This is not a buy the gap down type of scenario with NVIDIA, which is what kind of concerns me a little bit with Micron. But Micron's held up phenomenally well today, and what could have been a pretty bad day for Micron. The semiconductor index is down about 1.5% here. Micron trading about with that, but given Micron's delta, given its beta, how much it moves relative to its sector, to be down 50 cents here today, that's pretty impressive. That's pretty impressive by Micron. And we see a little strength Monday morning. That'll be one that I will have a close eye on being a buyer of. You can see the hourly chart, and this explains why I'm not getting in right here. We're kind of in no man's land from an hourly perspective, right? This is something that could easily, with this gap, it really hasn't filled the gap, and it's something that easily could gap down and drop here to the lower band and bounce off that level. So for me, we're kind of in no man's land in the shorter term with Micron, but when we look at overall how well it's held up today, I think that's pretty impressive and something that is worth taking a look at Monday, and could be a very nice challenge trade to kick off early next week. All right, so that's kind of where I stand with things. I'll take a closer look at things here about in another hour, and make any kind of final trade decision. But as I mentioned, most likely I'll run into the close here with Pepsi. I just kind of use this little pullback as an opportunity to get in, and we'll run with that into the close, and then that'll leave me about $2,200 in cash, and looking to run with that here early next week. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.